G'day guys, I'm Tor, and welcome to another episode of Pro Stock Tips. Now today, I have some really exciting news for you from Sandfire Resources. Now Sandfire Resources has recently announced the acquisition of the MATSA Aquisition mine in Spain. So let's shorten that down to MATSA, because we're Aussie, right? So the MATSA mining complex is a large copper mine in Spain. So this is quite an exciting transaction for Sandfire Resources. However, if you take a look at the share price, it doesn't look as if investors are excited, down 10 to 15% today. However, in my opinion, the share price has been artificially suppressed by a large-scale equity raising, which is a one-to-one entitlement offer for existing shareholders on the record date, which was last week, in which they can simply acquire on a one-to-one basis shares at $5.40. So naturally they would be able to sell off their existing holdings and buy them back cheaper. So as you would expect, the share price is hovering around the $5.40 to $5.50 mark. Now, what my thoughts are is that's artificially suppressed, and once the large-scale entitlement offer closes, then we should hopefully see the share price rally back up over time. Perhaps as the close draws nearer for the finalization of the acquisition, which should happen sometime early next year. So that's what I would think over the next 12 months, 6 to 12 months, we could see the share price rally as in anticipation of pending good news flow. As we know from stocks, investors like to invest prior, so buy the rumor and sell the news, and the news would be the close of that transaction. Or potentially even you could hold until the next year's full year financial results, where you would finally see proof of the earnings potential that the MATSA acquisition can bring to Sandfire Resources. So that's my thoughts, and I would put a price target of $9 to $10 on it, which is my conservative price target based on copper prices remaining above $4 per pound. However, if copper prices do exceed $4 per pound, or perhaps even if they are quite stable at these levels, we could see a higher price from Sandfire Resources post-acquisition. Now, especially because this adds extensively to the lifespan in terms of production. With their Australian DeGrussa mine coming to the end of its life, so it's depleted most of its reserves. It should have only 1.5 years of mine life left, unless, it would be great if they can extend that mine life, which is something that they're looking into. However, this acquisition provides a 110 kilotons per annum to production, which is already more than the 72 kilotons per annum of production from the DeGrussa mine. And if we have a look at the mines around the world that they have in their portfolio, they've got the DeGrussa mine in Australia, they've got the Kalahari copper belt in Botswana, so they have the A4 and the Motheo mine down there, and obviously they're acquiring the MATSA mine, which is going to produce 110 kilotons per annum, is expected, and the Black Butte mine in the USA. So if we remove the DeGrussa mine, we could see a total of 193 kilotons per annum once all three of these mines are in production. However, next year we could be looking at around the 183 kilotons per annum, which is slightly more than the output in terms of copper equivalents here than the output of Oz Minerals, which is at 173 kilotons per annum. And as we can see here, another piece of information which is critically important, I would say, is the cost of production has dropped down to 0.74 from $1.05. So now they're able to mine copper more cheaply and have a increased margin, which is quite comparable here with Oz Minerals. And we're going to be seeing, going on a go forward basis, slightly more production than Oz Minerals. However, if we take a look at the valuations, Oz Minerals is valued at, has a market cap of 7.4 billion, whereas Sandfire Pro Forma has a valuation estimate of 2.3 billion, which is about a third of Oz Minerals. Prior to that, Sandfire Resources has a $1.1 billion valuation, which has dropped to just over $1 billion today. But on the pro forma basis, the valuation would be $2.3 billion. Now, Mineral Resources has actually almost quadrupled, basically, as you can see from this chart. So they've vastly increased their mineral resource. And although that mineral resource is still about a third of that of Oz Minerals, you've got to discount the production in later years to a greater extent. So therefore, I would say that, you know, you can't just say that Sandfire Pro Forma would be worth 1/3 of Oz Minerals. You know, I'd be looking at least 50%, you know, present value. And given that they're producing even more copper and they're improving their margins here, you know, I'd give quite a bit higher valuation. So they shouldn't be trading at this level of discount to Oz Minerals, in my opinion. Now, obviously from this slide here, we can see that, you know, they're being conservative, and obviously they've got a lot of expansion and mine life extension potential. So you could see some really good earnings come out of this company post acquisition. And obviously, you know, the copper price is critical. Copper price is critical here to the share price, as it is the primary underlying commodity that they're going to be producing. And copper price is above $4 per pound at the moment. And if it can stay that way, then they're certainly undervalued, I would say, based on their earnings potential at these prices. And will copper prices stay at these levels or go even higher? I think it's quite possible. If you have a look at there's a lot of conflicting analyst data or analyst price targets for copper. However, if you look at the Goldman Sachs, they have quite a high estimate. They even expect up to a $15,000 per ton copper price. And basically what they've outlined on this slide, Sandfire that is, not Goldman Sachs, is that you know, the electrical network and obviously EVs are your primary drivers in demand for copper. And according to Wood Mackenzie's, you know, by 2040 there's a quite significant gap there. It's basically expecting 50% more copper demand. You know, they haven't actually drawn up put in a diagram of copper supply going forward. They haven't put any estimates of that in. However, you know, it's certainly worth looking at because a lot of analysts are expecting copper production to decrease over the decade unless new mines are brought online. So now if we look at MATSA, this is very important. If we look at MATSA's earning potential, we can see that MATSA had a EBITDA of $293 million for the second half for H2 FY21. So that's quite high. Now, if we continue with this $4 per pound, you know, you're looking at 500 to 600 million EBITDA. And if you add on Matteo and DeGrussa, you know, you could be looking at even higher figures. So essentially, having a pro forma valuation of $2.3 billion, you know, and having a earnings which is, you know, just under half of that. So they could be trading at, say, 3 times EBITDA is quite low. There's certainly potential, you know, for the price to earnings ratio of the pro forma company to increase substantially to a higher ratio. And if you have a look at their peers on this slide, you can see that relative to their peers, they would be trading at a lower enterprise value multiple to their EBITDA than many of their peers. So that's why I'd certainly expect there to be potential for the share price to double in the next 12 months, especially if the copper price stays holds these levels or goes higher. So personally, I think it is a buy if you have a 12-month time frame for a 100% plus return on investment.